You're welcome to my channel. In this video, we are going to be handling cash budget in working capital under cash management. Cash budget. The definition: cash budget is a statement of forecasted cash receipts and cash payments, sources of cash, and what to spend cash on. It's a forecasted statement, so it's an estimation of what you're going to receive and what you're expecting to pay in future. Yeah, that's what cash budget is all about. And in this video, we are going to be looking at how to prepare a cash budget. Yeah, and we shall start with the steps involved in preparation of a cash budget. Steps involved in preparation of a cash budget. First, we start with estimation of cash inflows. Another name for cash inflows is cash receipts. And under cash inflows, we have things like cash sales, we have credit sales. Credit sales in the month that we realize it as cash. In the month that our customers pay us is when we record the credit sales. Credit sales is the same as collection from debtors. Then we have sale of marketable securities like shares. Then we have issue of new securities for cash. Then raising of a loan or borrowing. We have proceeds from sale of an asset. After you selling an asset, you receive cash. So we record it as an inflow. Then any miscellaneous receipts or unexpected income. Yeah, and that is the first step to the preparation of a cash budget. Yeah, which is estimation of cash inflows. Then we are going to the second step, which is estimation of cash outflows. The second step is estimation of cash outflows or disbursements or cash payments. And under estimation of cash outflows, we have things like any cash purchases. When you purchase something using cash, it's regarded as an outflow. Then any sundry creditors or bills payable. Then payments of salaries and wages, rent and other expenses. We also have payments in the nature of capital expenditure. Capital expenditure is that money that is spent to acquire long-term assets. Yeah. Then we have loan repayment. And those are the things under cash outflows or disbursements or cash payments. Then the third step is estimation of closing balances to find out whether you close with a cash surplus or a cash deficit. And in case you close with a surplus, you have to invest in short-term assets. You have to invest that surplus money in short-term assets. Just in case you need the money, you can easily turn it into cash. But when you get a deficit, when you close with a deficit, you plan to get appropriate sources of income. And those were the three steps to the preparation of a cash budget. Now we are going to have an example about cash budget. The example goes like, Last Limited has estimated that for the coming financial year 2016-2017, there is need for a comprehensive preparation of a cash budget to ensure that cash is managed well. Lush Limited has provided you with the following information regarding forecasted sales and expenses. So we have total sales and lighting expenses in millions of Uganda shillings. Yeah, and we have months, we have 8 months, we have December, we have January, we have February, we have March, April, June, and July. Then we have the row of sales from December to July and lighting expenses from December to July. And then continuation, they said all sales were made on credit and will be collected as follows: 30% in the month of sale, 40% 1 month following the month of sale, and then 20% will be settled starting the second month after the month of sale in 3 equal installments, and the remainder will be a bad debt. We do not record bad debt in a cash budget because it's not a cash inflow and it's not a cash outflow. Yeah, so we are going to be handling one by one. We shall start with the sales. We shall draw a sales schedule, and we shall start with the column of period where we shall have sales. We shall have 30% sales. They say 30% will be paid in the sales month, and then 40% will be paid in the first month, then 20% will be paid in the second month, and the remainder is 10%, and they said it's a bad debt. Yeah. And then we shall have the total sales revenue or total collections from debtors. Let's continue with our sales schedule. They said 30% will be paid in the month of sales. So in the month of Feb, we are having sales of 60,000. Therefore, 30% of 60,000 is 18,000. We record it there. Then in the month of March, 30% of 90,000 is 27,000. We do the same thing for all the months. Then the second row, they're saying 40% will be paid in the first month after the month of sale. Therefore, it means that if the sales were made in Jan, 40% of those sales will be paid in Feb. And if the sales were made in Feb, 40% of those sales will be paid in March. And if the sales were made in March, 40% of those sales will be paid in April, like that. For the month of Feb, therefore, we shall get the sales of Jan times 40% to get what will be paid in the month of Feb. And in Jan, we had total sales of 120,000 from the question, then times 40%, we get 48,000, and that's what we shall record in the sales schedule. Then, in order for us to get what was paid in the month of March, we shall get 40% of the total sales in the month of Feb. So we shall get the total sales of Feb times 40% in order for us to get 40% that was paid in March. So 60,000 times 40%, we get 24,000, and that's what we shall record. Then we shall do the same thing for all the remaining months. Then another row has 20% will be paid in the second month after the month of sale. It means that the 20% of the sales that were made in December will be paid in Feb after skipping 2 months, which is December and January. Then it will be paid in Feb. Then 20% of the sales that were made in Jan will be paid in March. 20% of the sales that were made in Feb will be paid in April, like that. So for February, we shall get total sales of December times 20% in order for us to get the 20% that was paid in Feb. Therefore, 160,000 times 20%, we get 32,000, and that's what we shall record. Then for March, we shall get the total sales of Jan times 20% in order for us to get the 20% that was paid in March. So 120,000 times 20%, we get 24,000, and that's what we shall record. Then we shall do the same thing for the rest of the months. In order for us to get what was paid in April, we shall get 20% of the total sales of Feb. Yeah, like that, until when the months are done. Then after we shall get the total We shall get the total sales revenue that is received in each month. We add the 30% plus the 40% plus the 20%. We don't add the 10% because it's bad debts and we don't put it anywhere in our cash budget. Here for Feb it's 98,000. For March it's 75,000. For April it's 93,000. For May it's 105,000. Then for June it's 83,500. Yeah, then let's read another paragraph in our question. That was all about the sales schedule and the total sales revenue is what we shall record in our cash budget. Another paragraph says the company expects to receive tax refunds from URA in the month of May of 8 million. Tax refund is a cash inflow. Yeah, and it will be received in the month of May. Therefore, we shall only record it in the month of May, and it's 80 million. As we continue, they've said 60% of lighting expenses will be paid in the month in which they are incurred, and the balance will be paid in the following month. Yeah, therefore, we are going to draw a lighting expenses schedule to see how the lighting expenses will be paid for. So we shall draw the lighting expenses schedule. Period we have Feb, March, April, May, June. Then we shall write the lighting expenses, the total lighting expenses for all the months. In Feb it's 5,000, in March it's 11,000, in April it's 32,000, in May it's 20,000, then in June it's 25,000. They said 60% will be paid in the month in which they were incurred. Therefore, in Feb, we shall get 60% of 5,000, which is 3,000. In March, we shall get 60% of 11,000, which is 6,600. Then in April, we shall get 60% of 32,000, which is 19,200. And we shall do the same thing for the remaining months. Then they said 40% will be paid in the first month after the month in which they were incurred. Therefore, 40% of the lighting expenses for Jan will be paid in Feb. 40% of the lighting expenses in Feb will be paid in March. 40% of the lighting expenses in March will be paid in April, like that. Therefore, to get the 40% that will be paid in Feb, we shall get the total lighting expenses of Jan times 40%, which is 40,000 times 40%, we get 16,000. And that's what we shall record. And for March, we shall get the total lighting expenses for Feb times 40%, which is 5,000 times 40%, we get 2,000. And that's what we shall record. Then we shall do the same thing for all the months. To get the 40% that will be paid in April, we shall get 40% of the total lighting expenses of March. Yeah. Then to get what will be paid in May, we shall get 40% of the lighting expenses of April, like that. Then, in order for us to get the total lighting expenses that were paid in each month, we shall add the 60% plus the 40%. So for Feb, we shall add 3,000 plus 16,000, we get 19,000. For March, we add 6,600 plus 2,000, we get 8,600. We do the same thing for all the months and we get the totals. And those are the figures that we shall put in our cash budget. Then we continue with our question. They said, Last Limited will acquire a loan worth 20M on 30th March, and this will be repaid on 15th June. Yeah, therefore, in our cash inflows, we shall record a loan because it's a source of income. Under March, we shall put a loan of 20M. And then in cash outflows, we shall put repayment of a loan in June, of 20M. Then as we continue reading, that said, interest charged on the loan is 15% per year. Interest is 15% per year, but interest is paid on a monthly basis. Therefore, we are going to calculate for interest. They said interest is 15% per year. Therefore, we shall first calculate 15% times the loan, which is 20 million, and we get 3 million. But they said it's for a full year, but interest is to be paid on a monthly basis. Therefore, we shall divide 3 million divided by 12, so we get 250,000, and that's the interest that will be paid on a monthly basis. Then we shall continue with our question. They have said Last Limited pays its agents sales commission of 3% on total sales of each month. However, the agent receives their commission in the month following the month of sale. Therefore, if you make sales in January, 3% of the sales of January will be paid in Feb. 3% of the sales in Feb will be paid in March. 3% of the sales in March will be paid in April. 3% of the sales in April will be paid in May. Like that. Therefore, we are going to draw a commission schedule to see how commission will be paid. We shall draw a commission schedule, and they said commission will be paid on sales. Therefore, we shall first record total sales for all the months: Feb, March, April, May, June. Then they said commission is 3%, and it will be paid a month after sales are made. Therefore, the commission of Jan will be paid in Feb. In order for us to get the commission that was paid in Feb, we get total sales of Jan times 3%. So we get 120,000 times 3%, and we get 3,600. And that will be the commission that will be paid in Feb. Then in order for us to get the commission that will be paid in March, we get the total sales of Feb times 3%. And what we get is 1,800, and that's the commission that will be paid in March. We do the same thing for April, May, June. For April, May, and June. Paying of commission is an outflow, so those figures are what we shall record in our cash budget under cash outflows. Let's continue with our question. They said purchases equal to a half of the next month's sales are made every month. Purchases are equal to a half of next month's sales are made every month, and suppliers grant 2 months time lag for the company to settle their bills. Therefore, the company takes 2 months to pay the creditors, and they said the company expects to receive discounts of 5% on purchases made each month. Therefore, in order for us to get the amount that is paid to creditors every month, we have to draw a purchases. We shall draw a purchases schedule. We shall have period from Feb to June. Then we shall record total sales for all the months. Then they said purchases made in each month equals to a half of the sales for the next month. Therefore, the purchases that are made in Feb equal to a half of the sales of March. Therefore, we shall get 90,000 divided by 2, we get 45,000. And for March, we shall get 150,000 divided by 2, we get 75,000. And we shall do the same thing for all the months in order for us to get purchases. Then we go to discount. They say there is discount received of 5%. Therefore, we shall calculate 5% of the purchases. In Feb, we shall calculate 5% of 45,000, which is 2,250. Then we shall do the same thing for all the months. But they said the company is to pay creditors 2 months after the purchases. Therefore, the total of Feb will be paid after 2 months, that is Feb and March. Therefore, the total of Feb will be paid in April. The figures of March will be paid in May. The figures of April will be paid in June, like that. And in Feb, we shall pay the date of December, and in March, we shall pay the date of Jan. That's how we are going to do it. And after subtracting the discount from the purchases, we shall get what we shall pay to the suppliers. Here in Feb, we shall pay the date of December, which is 57,000. Then in March, we shall pay the date of January. In April, we shall pay the date of February. In May, we shall pay the date of March. And in June, we shall pay the date of April. Then lastly, they said cash balance as at 31st January is expected to be 8 million. So the closing balance for January will become the opening balance for Feb. And required, they want us to prepare a cash budget from Feb to June for 2016. So we are preparing a cash budget for Feb, March, April, May, and June. Yeah. We shall draw our cash budget. Last Limited is cash budget. They told us that the figures are in millions. Period. They told us to prepare a cash budget from Feb to June. So Feb, March, April, May, June. Then cash inflows, we shall use all the figures from our schedules. From the sales schedule, in Feb, we had the sales revenue of 98,000. In March, we had 75,000. In April, we had 93,000. In May, we had 105,000. In June, we had 83,000. Then, under cash inflows, we still had a tax refund in May, and it was 8 million. Since the figures are in millions, we shall only record 8. Then, loan, they told us Last Limited is expecting to acquire a loan in March of 20 million. Since the figures are in millions, therefore we shall only record 20. Yeah. Then we get the total inflows. The total inflows for Feb, 98,000. For March, 75,020. For April, 93,000. For May, 105,008. For June, 83,000. Like that. Then we go to cash outflows. And first we have interest. We had interest of 250,000 that is supposed to be paid monthly, but as we said, the figures are in millions. So we shall divide 250 divide by 1 million, yeah, and we get 0.25 for all the months. We shall record interest starting from March since we got the loan in March. Then we shall have loan repayment. They said the loan was repaid in June and it was 20 million, so we shall record only 20 since the figures are in millions under cash outflows. Payment to suppliers. Payment to suppliers, we shall get it from the purchases schedule. Yeah, we shall record the figures the way they were in the purchases schedule. For Feb, it was 57,000. For March, it was 28,500. For April, it was 42,750. For May, it was 71,250. And for June, it was 33,250. Another cash outflow is commission paid. We shall record commission that we calculated for it in the commission schedule. Yeah, for Feb it was 3,600. For March it was 1,800. For April it was 2,700. For May it was 4,500. And for June it was 2,100. Then another cash outflow we have is lighting expenses. We shall also record them, though we calculated for them in the lighting expenses schedule. For Feb, we have 19,000. For March, we have 8,600. For April, we have 23,600. For May, we have 24,800. And then for June, we have 23,000. Then after, we shall get the total outflows, yeah, by adding all the outflows for each month, like that. After getting the total outflows, we shall get net cash flows. Net cash flows, we get them by subtracting total outflows from total inflows. So for Feb, we shall get 98,000 minus 79,600, and the net cash flows will be 18,400. Then we shall do the same thing for all the months. We shall go to balance brought down or the opening balance. They only gave us the opening balance for Feb. It was 8 million. But since our figures are in millions, we shall only record 8. Yeah, then we shall get the closing balance for Feb by adding the net cash flows plus the opening balance. We get the closing balance for Feb, and the closing balance for Feb will be the opening balance for March. Yeah, like that. Then we shall add the net cash flows for March plus the opening balance to get the closing balance, and the closing balance for March will be the opening balance for April, like that. We do the same thing until, if the closing balance in the last month is positive, it means that we are having a surplus. But if it's a negative, it means that we are having a deficit. But in this case, we are having a positive figure, so we are having a surplus of 107,565. Yeah, and that is the cash budget that they asked for in the question. Thanks for watching. Don't forget to subscribe, like, comment, share with your friends, and watch my next video. We shall be talking about debtors or receivables management and our working capital.